Hello. Welcome to my channel, my dear friends. My name is Vilash. I'm a trader next door. In this video, I'll be analyzing the chart of gold USD for Monday. If you're watching my videos for the first time, you can subscribe to my channel for regular market analysis. So let's get started. So, my dear friends, finally we have a weekend, and yes, we are all thrilled to see gold on Monday. As we all know that after NFP and CPI, there was a severe fall on DXY, as a result of which we saw Euro USD, GBP USD flying. Gold is stuck in the range right now, but the rest of the pairs are flying right now. As a result, DXY will be very important for all the US dollar pairs, not only gold. So DXY is under the dominance of sellers, under severe selling pressure. There is no doubt about it. DXY broke the $100 level mark and right now standing at 99.95. Things are still very critical for DXY. Sellers are still very dominating, and as expected on Friday, we got to see some temporary recovery on the chart of DXY. So if the recovery on DXY continues, if DXY tries to recover again, do not consider it as a trend reversal, because things have not changed. We need a fundamental factor that will push the market towards the upside. So this is just a temporary recovery. Right after the market opening, if DXY tries to continue the upside, then obviously things will not be positive again. The first resistance will be around 100.50, and then the second resistance will be around 100.80. 100.50 because of FIBO 23.6% retracement here, and 100.80 because that was the last support, and the last support will be working as a critical resistance here. So these are the two levels on the chart of DXY. If there is no sudden news in the market, under normal circumstances, we can expect that DXY will be facing severe selling pressure around these areas. And if market reverses again from these two levels, we can plan our trades accordingly. So that's all about DXY. My dear friends, this is Chart Prime, and we can see Market Oracle Pro has generated 7 signals. In comparison to other weeks, the number of signals are a little bit less this week because gold was stuck inside our range. Out of 7 signals, we can see that 5 of the signals have done a pretty decent job. On 15 minutes time frame, getting 30, 35, 40 pips is quite good enough. Apart from Market Oracle Pro, Prime Oscillator Pro has also generated many signals, and they have also done a pretty decent job. If you don't know about Chart Prime, then Chart Prime is a custom indicator rocking the trading community right now. Watch the complete video, because by the end of the video, we will talk about Chart Prime in detail. So this is the 1 hour chart of gold USD in front of us, and sadly the chart of gold is not very clear, and as a result we do not have any strong or good levels on the chart as well. So let's discuss one by one. First of all, gold is still stuck inside a range right now. 1964 at the top is still working as resistance, and sadly gold is unable to break this level here. On the other hand, we have 1951 to 1950 as the support on the downside. Yesterday we talked about a selling opportunity, quick selling opportunity below 1950, and sadly we didn't get that opportunity. And this is the range of gold right now, 64 at the top and 51 to 50 at the bottom as the support for the market. And if you look at the chart right now, then it looks like that there is a possibility of market going for some stop loss hunting below this level and bouncing again. In that case, the volatility of the market will be a decisive factor. As we all know that during the first half of Monday, there is not much volatility. If the volatility of the market remains like this, listen to me carefully, okay? If the volatility of the market remains like this and you see that market is going down, means that market is breaking the range, but there is not much volume. In that case, you should not trust a breakdown. As I always say, my dear friends, that for a breakout or breakdown, volume is extremely important. If there is not much volume or volatility, then obviously that will lead to a false breakout. In that case, you can look for a buy around this 1947. And if there's not much volume in the market, 1947 will be working as the next immediate support on the chart of gold, because FIBO 23.6% retracement level. FIBO 23 is not a very strong one, but still, when the volatility of the market is low, you can expect FIBO 23.6 to work as support. So if market is slow, volume volume is not much there, you can expect 1947 to work as the first support. And in case market surprises us, because sometimes market do surprise us in the morning, if market surprises us with a big red candle market going down, in that case, do not trust 1947 and wait for the market to hit the next support level around 1940. 1940 to 1937. Remember 1937? Yes, 1937 to 1940 is back again. 1940, 1937 will be the second support on the chart of gold. And hopefully this will work, because 1947, 1940 to 1937 was a very strong resistance. The same strong resistance will be working as support here. Along with that, you can see that we also have FIBO 38.2% retracement level. If we combine both the factors here, 1940, 1937 is the second support. So in simple words, if the volatility of the market is not very high, you can expect this to work as support. But if the volatility is high, then expect the market to take support around 1937 to 1940. But right now market is stuck in a range, so things are not very positive right now. And if we look at the weekly chart, then the weekly chart is quite clean. It looks like that market was very bullish. Yes, the market is bullish. So if you're a swing trader, if you're a positional trader, then you should be looking for buy positions only, because the market is still very, very bullish for you if you're a positional trader or swing trader. But if you're a day trader, the market is stuck in a range, and you need to wait for the market to break 1964 level. If market breaks 1964 level, then only we will consider that yes, the trend of the market is continuing, market is bullish again. I will be looking for a buy position and also recommend a buy above 1964. As I said, things are not very clear right now. We don't have any strong levels, so as a result, you need to be a little bit careful, because this range, a market inside a range, is not a very good thing. When the dollar touched the double-digit mark, gold was still stuck inside a range only. And in comparison to Euro USD, GBP USD, gold did not witness such big bullishness. So let's wait and watch. There is a possibility of a red candle, I think so. And if you look at a 15 minutes time frame, my difference, then you can see that we have a pure sideways market. Okay, so the last opportunity on the chart. On Monday, if you see that right after the market opening, market is going down with small candles on 15 minutes time frame. Observe the market at 1952 level. If you see gold taking support around 1952 and going up, you can look for a quick buy opportunity of 25 to 30 pips. This is for pure day traders. Not a very strong level, but still, if you want to take, you can go for it. Otherwise, it's better to wait and watch and wait for the levels that we just discussed. Taking a buy at 1952 is very optional or subjective on the basis of volatility of the market. Yes, today's video is all about volatility, because as a trader, it is also very important for you to understand the importance of volatility in the market. Okay, so these are the only trading opportunities. Yes, sadly, my dear friends, this is a weekly video and trading opportunities are very less. Okay. Again, I'm repeating, you can consider a buy position above 1964 level, because market needs to break 1964, then only we can consider it as a trend continuation. If gold breaks 1964 level, then only we can think about market going towards 1980 or 2000 level. But right now market is stuck inside a range here. On the other hand, as market is stuck inside a range, market breaks the level here or range here, the chance is very high market may go for stop loss hunting also. In that case, we can look for some buy around 1947 level if the volatility of market is low, because we have seen the market, we know that sometimes market breaks the support but the volatility is low. In that case, you can expect 1947 to act as the first support. In case of high volatility, 1940 to 1937 will be the second support. So still we are considering the market to be bullish, considering all the factors. So as a result, we are still hopeful that we will get better opportunities at retracement. Buy at retracement or buy at breakout, but do not enter here and there and make some mistakes. And if the market is too sleepy right after market opening, we can also look for some buy on 1952 level if market takes support on 15 minutes chart. Okay, but if you don't want to take the risk, don't take the risk, because 1952 is not a good level also. That's all from my side, my dear friends. So this is ChartPrime again. My dear friends, ChartPrime is a very useful and powerful tool, not only for generating buy and sell signals on the chart, but if you also want to take your analysis to the next level, then ChartPrime is a very, very powerful help, powerful friend, because they have three powerful indicators: Market Oracle Pro, Market Dynamics Pro, and Prime Oscillator Pro. So first of all, the Market Oracle Pro not only generates buy and sell signals on the chart, but it also helps you with the dynamic support resistances in trending market. And the green line here, the light green line here, tells you about the trend of the market. Trend is our friend, so that you don't mess with the best friend. So it acts as a help. And along with that, we have Prime Oscillator Pro. Prime Oscillator Pro, as you can clearly see, that it resembles RSI, means it's an oscillator. It tells you about the overbought and oversold levels. Along with that, it also marks the divergences for you. You can see that you don't need to worry about divergences because the tool does the job for you. Along with that, oscillator also generates buy and sell signals on the basis of overbought and oversold levels. The green arrow at the bottom marks the buy levels, whereas the red arrows at the top marks the sell opportunities on the chart. So apart from Market Oracle Pro, the Prime Oscillator Pro also marks buy and sell levels for you. And if you prefer to trade on smart money concept, chart pattern detection, then Market Dynamics Pro is the tool for you. You can see that the tool detects these chart patterns for you. It also does the POS chalk, change of character, and also marks the order blocks for you. My dear friend, ChartPrime is a very useful tool if you really want to take your trading as a serious source of income. Right now, ChartPrime is giving a 30% off right now. You can scan the QR code on the screen. You can also click on the I button on the screen, or you can also check out the link in the description. Please check them out.